The US's attack on Iran effectively shut down the Strait of Hormuz over the weekend, which is a major artery for LNG to arrive in Europe. Qatar already shut down LNG production, and the European energy markets are feeling it. So, what does this mean for us? How high can it go? That is the major question we are answering in this very, very, very short video. Now, here's the thing, I cannot tell how high it's going to go, but I'll give you some advice on when we identify that the peak has been reached. Right now, I am looking at the 50 level on the TTF front month, which is a key psychological level. The first thing I do when I see such an important level is I try to look back and see if it has been hit before, if it was an important peak at any time previously. Because if it was, then we might have already topped out. So I'm seeing here on the left, we have a peak near the 42. So that's not quite it. So I'm going further to the left. And I see that previously a peak was hit just below 60. So right now we are at a psychologically important 50. We already made it above 43 and we have still some room to go towards 60. So what do we do? I don't think this can be estimated on the daily chart. Absolutely not. So for that, we go on to the intraday charts. The hourly chart is also impossible to trade. So what we do here is we go onto the 15-minute chart to get an early estimation of what might be going on. I do not recommend to go much deeper, but during such extreme periods, we can make an exception. So here's the thing, I cannot tell if this initial red candle is already the start of the decline. So let's have a quick look at the 5-minute chart. So we are, the lower we go, we are introducing a lot more and more noise. But let's have a quick look here. On the 5-minute chart, I see that we already had a shooting star, which is a bearish reversal candles. The bulls failed to move higher for 3 consecutive more candles, so 15 minutes. What I'm doing now is I keep monitoring the stochastic. As soon as we start pushing below the 80, which is below the overbought territory, and it is combined with another red candle, then I would say this might have been it. I also keep an eye on the MACD, the moving average convergence divergence. We are seeing that we are already topping out where we have previously topped out. So the momentum isn't really going all that much higher right now. So there's another thing I do. I put on the Fibonacci retracement levels. There you go. Put the 0 down here. Put the 100 up there. No, wait, that's a fib extension. Never mind. You can see the 0 is up here at the 48.27 and the 100 is down here at the 38.88, which is nearly where we started. So if we start getting a 5-minute close below the 23.6% fib retracement at 46.39, then there's a good chance that the market could at least decline towards 42.64. If we do not see any bullish reversal candles on the 5-minute chart at this level, then there's a good chance that we'll continue lower. If at any point we do push below the 23.6% fib retracement and we monitor the 38.2, the 61.8% fib retracement, if we start finding a bullish reversal candle pattern here combined with a bullish stochastic, I don't think that's going to happen, then we might bounce. Okay, now here's the thing, we are in no man's land as I'm saying this. So if we simply push above 48.72, then I feel like the 55 or 60 is nothing crazy to anticipate. Now, here's the thing. The important thing is that we are not making predictions here, and you shouldn't either. Everyone is scrambling for some reason, so nobody knows. So you don't have to be the one who makes the decision on behalf of the market, okay? Just deal with exactly these three levels. The bulls continue towards the 55 or 60 at 48.72. If we push higher, always go with the same idea. As soon as we start seeing bearish reversal candles, put the fibs higher and higher and higher. And for a bearish validation, always choose the 23.6% fib retracement, right? If we push higher, we just put the 0 higher and higher, and we look at the 23.6. If right now we push below the 23.6% fib retracement at 46.39, then we have a correction going on. Always in a correction, monitor for a bullish reversal candle at 42.64 right now, which is 61.8% fib retracement. If we don't get a bullish reversal here, then we continue lower. Always corroborate that with the stochastic. If we're getting a bearish signal here, we push below that, then it's more likely to go down. Right now, it could go either way. Now, here's the thing. Just because the price is going up and it's unreasonable doesn't mean spec traders can't profit from that. For our physical buyers, that is a little bit more tricky, but I would be surprised if we remain near the 50 for much, much longer. So if we push higher, could be interesting for you. Now, here's the thing. Even before the war, the the TTF, NBP were already set up for bounce. We already anticipated the market to move significantly higher even before we had the anticipation of the war. So here, let me show you very quickly the clever markets. Dashboard what we published this morning at 7 a.m. CET. So we already expected the market to go higher. Can you see that? Boom. That's what we are thinking, at least going towards 36.36. That was written before the war. So we already anticipated the market to move higher. We already also before the war anticipated that, the market already anticipated to move higher with our weekly sentiment survey that's only available to our clients. So you can see strongly bullish even before the war was announced. So with the war now happening, this is just adding fuel to the fire. Make note of the FIB work that I am suggesting for today. Stay safe out there. See you around and bye bye.